Hello, this is Crystal with Slick Trade, and in this presentation, I'm going to go over pure price action presentation number 7. In today's lesson, we're going to cover triple top and triple bottom patterns. As always, before we get started, we must go through a disclaimer. Please feel free to pause the video and read through the entire disclaimer, but when trading any financial asset, there's a possibility that you may sustain a partial or total loss of your investment funds. As a result, it is advised you should never invest with or trade upon money which you cannot afford to lose through this manner of trading. Trading involves a real risk of loss, and past performance does not ensure future results. So let's get started. Triple top and triple bottom patterns produce an approximate 78% win rate. This pattern is another price reversal pattern, similar to the double top and double bottom patterns. The triple top pattern is defined by 3 almost equal highs, and a triple bottom pattern is defined by 3 almost equal lows, both with space in between. The triple top pattern is complete when price breaks below the previous swing low points, and is considered successful when price moves at least the same distance of the furthest swing low. So in this example to the right, we see the triple top. We have 1, and then swing low, 2, swing low, and then 3. Then we have the price break below the lowest swing low. Okay? Now, as you can see, this third top did not come exactly to the same resistance point. It does not have to be exact, it just has to be close. You just need to see basically point 1, point 2, point 3. Okay, you want to see both of those swing lows in there. And then when price breaks, this was considered a successful triple top pattern because price moved at least this distance. Okay? Triple bottom patterns are complete when price breaks above the previous swing high points, and is considered successful when price moves at least the same distance of the furthest swing high. So we see here, point 1, swing high, point 2, swing high, point 3, boom, price break. Okay? This one is a little bit more difficult to see because we have a little bit of movement in here. Okay? Some would actually consider this to be a consolidation moment, and I do see this as being consolidation. However, you can clearly see the triple bottom here, and they all did come down to that same level of support. Okay? When price broke the highest swing high, which was right here, this was considered successful because even though we had a retracement back down, that would not have hit your stop loss, and price did continue at least the same distance of the triple bottom pattern. Okay. Your pending orders. Okay, when you recognize a triple top or bottom pattern, you can either A, enter at market price once that breakout occurs, or B, set a pending order. The pending order you would want to set would be just above the previous swing high for a triple bottom pattern, or just below the previous swing low for a triple top pattern. Okay. In the example to the right, you see a triple bottom pattern, the one that I just showed you in the previous example. The second trend line is the previous swing high, and the pending order would be set just above for a long position. Okay, so right here, swing high. Now, as you can see, I set this at the highest candle body. I do not set it at the wick. Okay, I set it at the body, which is right here. That's what defines that, and just above that would be the pending order. Okay, some people do put it at the actual wick, above that wick, but I don't. I always keep it at the body. All right. Same with here. To define that triple bottom, I did not include the candle wick. I only included to the body of the lowest. Okay. So once price broke, your pending order would have been initiated, and you would have been put into a long position, or if you entered at market price, you would have entered during this candle, okay, or after the formation of it. Trail stopping and risk to reward. After you've decided whether you'll be entering at market price or setting pending orders, you must have a trading plan in place to take profit levels and solid risk management. In the example to the right, you see a triple bottom pattern, the same pattern we just looked at. The lines represent TP, or take profit levels, for multiple positions. They are 1 to 1, 2 to 1, 3 to 1, and a fourth position of 3 to 1 with a trail stop. Okay, so here we have point 1, and first swing high, point 2, second swing high, point 3. Here we have that price break. Okay, this would have been your pending orders. They would have been set right there. Okay, now your 1 to 1 would have been here, and that would have been hit during that first price movement up. Okay, your other 3 positions would still be open, okay, at this point. And then here they start to go back into profit again, come back down to right about where you entered. Here your second is almost hit, but not quite. Again, we have price coming back down. And then here is where your second position would have hit its take profit. And then your third would be up here, which I don't actually have on the chart to show you. So that's how you'd set that up. Pretty simple, very similar to the double top and double bottom patterns. And in my next lesson, I'll be covering bullish and bearish rectangle patterns. Okay, I will see you then.